Federal government and Lagos State partner to deepen public-private collaboration through new GPS dialogue series. Nigeria's foreign reserve rise by $540.28 million in 2 weeks to $43.17 billion. Oil exchange gains after OPEC Plus posts first quarter 2026 output hikes. Asia trades mix after Chinese-Australian data. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Let's begin by telling you that the federal and Lagos state governments are strengthening their partnership to accelerate economic growth and private sector participation through a new initiative. The government and private sector GPS dialogue series. Minister of State for Finance, Dr. Doris Anita, disclosed this during a meeting with Lagos State Governor Babajide Sanwo-Olu in Lagos. A statement from the Ministry of Finance noted that it is in line with the presidential directive for ministers to engage stakeholders nationwide to promote economic development. Dr. Anita added that the engagement aims to strengthen understanding between policymakers and business leaders, identify barriers to investment, and co-create strategies that will enable Nigeria's economy to thrive in a rapidly changing global environment. Data from the Central Bank of Nigeria, CBN, shows that Nigeria's external reserves climbed by $540.28 million, rising from $42.63 billion to $43.17 billion on October 30, 2025. The sustained growth indicates an approximate 1.3% growth over 2 weeks and a 1.8% increase month on month from $42.40 billion at the beginning of October. The gross reserves recorded consistent daily increases throughout the review period, with the highest level of $43.17 billion attained on October 30th compared to $42.63 billion at the beginning of the period. And out of currency, how much is the Naira exchanging for the currencies? Let's see. And after discussion, diaspora investment represents a significant avenue for fostering development within nations. This form of investment garners keen interest from national governments, the international public sector, and private sector entities alike. Defined as financial instruments that generate assets, it enables migrants and their descendants to channel funds back into their countries of origin. The resulting economic benefits hold promise for driving sustainable development when effectively harnessed and extending non-traditional financing avenues such as diaspora investment to entrepreneurs, enhances access to credits and capital. Now, to speak on how diaspora investments can accelerate Nigeria's growth is an investment analyst, Dr. Ni Akisiju. You're welcome to the program.
Thanks so much for having me.
Okay, well, to start the conversation, Nigeria recorded an all-time high of $553 million in remittances in July 2024, a 130% rise year on year. How does this surge demonstrate the role of diaspora inflows in stabilizing Nigeria's foreign exchange and broader economy?
Yeah, I think over the past 7 months or thereabout, there had been a surge in the inflow of foreign exchange, and as noted by experts, it's obvious that the Nigerian sources of foreign exchange is becoming more diversified. So no longer do we just depend on the one source of our organic foreign exchange channel, which is sales from crude oil and gas. Now we have much a resurgence, as it were, because it's not new. A resurgence from inflow from foreign diaspora investment of diaspora investors, as it were. Where perhaps we also need to properly contextualize the whole concept of a diaspora inflow, because first we identify it as inflow. One, you have the categorization of individuals, diaspora, and that is Nigerian living abroad, sending money directly to their families, friends, and associates in Nigeria. When such inflow is recorded, it's actually a diaspora funding of a sort, to usually socially settle the families, the homestead, settle associates and all that. It could be intervention for alleviating poverty. It may be intervention for economic growth, where the diaspora source of that kind of inflow is an investment in the family, for education, for social movements, or even for investment in the purchase of land, property, and of course some other related activities. And then you also have where you have specific instruments, established by government for investments. You have as we have, I think about 3 or 4 years ago, diaspora bond. 300 million worth of diaspora bond floated by the federal government at that time, and it was really.
Now, before we get to that diaspora bond, it's a particular interest as part of Given this jump in inflows, what does it reveal about the untapped potential of diaspora capital beyond personal consumption? You talked about personal consumption.
Yeah, thank you. What it does is the undercurrent of the possible impact of diaspora investments. One, if you compare with some other South Asian countries, India, Pakistan, and all that, diaspora inflow, and investment especially had become a major component of the foreign exchange ecosystem, because some of this country had made it a strategic economic policy to have their people, either professionally migrate, economic migration as it were, or to even have them engage wherever they are inside in the homestead. But of course, they are engaged, what we call outsourcing, engaged with international corporations, where they also earn so much foreign exchange, and the foreign exchange are channeled, into the country as diaspora remittances, as it were. So when you have a large diasporan population that are economically engaged, it would, on the long run, or at the end of that threshold, impact the economy, because you have people who are economically engaged, who are earning income of some sort wherever they are engaged, and they are also now remitting, to the jurisdiction. So as I said, it could be consumption, it could be for investment. Where it is for investment, it is more formal. Where it is just for consumption, it is informal. There has been a big battle over time in Nigeria to find a way of channeling the inflow, diaspora inflow, into the formal segment of the banking industry, because at the point in time you had this wide gap between the black markets, the parallel markets, and the formal market. That is why the difference between the rates were quite high, and that became an attraction, for diaspora inflow to go into the black market, as it were, and it was not properly accounted for. But I think in current terms, with just a difference of between 10 and 20 in foreign exchange rates, either in the black market, between the black market, parallel market, and and the official market, there is a tendency for people to start. Of course, we are seeing that remittances are going into the formal segment of the market, and it is now reflecting, and it's one of those things, one of the factors that you have seen, reflecting in that $500+ million jump in the foreign exchange.
Okay, Nigeria received $20 to $21 billion in remittances in 2023, about 35% of sub-Saharan Africa's total. With such a dominant share, how can these funds be shifted from short-term household support to long-term productive investment in sectors? Because you talked about in other climes, it contributes a huge chunk to investment ventures. What about in the case of Nigeria? How do you think we can actually put this, huge sums of money into investment in different sectors of the economy?
It's about floating relevant instruments. We've heard of the diaspora bond, the 300 million that was floated during the Buhari era. And I think an area that would be of much attraction would be a diaspora infrastructure-focused bond. This would serve the two sides of the divide, the government and, of course, diaspora. The government and Nigerians are desirous of functional, up-to-date, adequate, sufficient infrastructural facilities, across segments of the country. And of course, when these are properly floated, they are profitable ventures. They are self-generating, revenue projects that will also, of course, earn possible profits that can also be returned in terms of interest to diaspora investors.
You talked about the investment which you just mentioned. You also talked about the fund that is talking about the government plans $10 billion diaspora fund to invest in infrastructure, healthcare, education, and others. How realistic is this particular size of money? When you realize in this particular huge size of money?
Yeah, very realistic, because one, if we have been able to record as high as 23 billion dollars in diaspora remittances, it does mean that when this is translated to investments, there are possible increase, a resurgence or increase, or a quantum leap in what could get into the Nigerian jurisdiction, as it were. So for me, I think the 10 billion diaspora infrastructural fund being planned, would be successful, because one, there is a renewed faith, trust, confidence in the Nigerian economy. And don't also forget that if you are talking diaspora fund, it is not as if it is limited, to Nigerians living abroad. It is actually opened, to even investors, or indigenes of other citizens of other countries living outside, but are interested in the kind of positive returns that the Nigerian economy is able, to give, to return to investors. So I think it is a major attraction, and like I said, it's going to serve two purposes. It serves the purpose of the Nigerian government providing adequate infrastructural facilities for its people. It serves the investors who would earn, the kind of profits that they may not even be able to access wherever they are staying, wherever they are living. Across the world, especially in the G7 economies, it's near impossible to earn up to 4 or 5% on your investment. In Nigeria, we are seeing a situation where positive real returns are being recorded since the federal government, since the central bank had been focused on this orthodoxy and insisting that rates should be higher than inflation rate. That is, interest rate should be higher. Interest rate or yields, should be higher than inflation rate. So any investor knows that whatever is investing would be, the returns will be higher than inflation rate, so which turns into a positive real return for the investor.
Now, Dr. Akiseju, before I let you go, trust in institutions and protection of investments are key barriers key barriers to when it comes to investment in Nigeria. Now, what institutional reforms are imperative to give diaspora investors guarantee of transparency, accountability, and return? I'm saying this because we've read about experiences about people who try to invest back home, but at the end of the day, a lot of things happen to the money. There's no, when you talk about transparency and accountability. So what key, when it comes to institutional reforms, what would you like to see?
The important thing for an investor is the guarantee and assurance that when he invests and when he wants his or her money back, it's available. By conduct, over the last 3-4 years, and in recent time, with what the governor of the CBN had done by clearing backlogs of possible funding of earlier investments, we have seen that the trust is being rebuilt, confidence is being rebuilt. So to a large extent, most investors now know that if you invest in Nigeria, anytime you want to exit, of course, you can access your investment and your returns on it. The $7 billion tie-down forest backlog, that was the first indication that the Nigerian government was ready to do business, with the world. And that indicator had also sent messages across investors across the world to say that, to start believing that once you bring your money, to Nigeria, you get it back. And that is what will impact the Nigerian living abroad too, because such person may actually also be doing some carry-on trade. Carry-on trade to mean translate to the fact that they may borrow money, at a low rate wherever they live, and then, of course, invest in Nigeria. When the money is due, when the fund is due, they are able to access the money and, of course, repay their bank loan. But the important thing is that the difference between the diasporan investment and a foreign investor is that it's likely that a bulk of that money remains in our system.
Okay. Dr. Nike Akisiju, it's been a pleasure having you on the program.
Thanks so much for having me.